Oil prices remain high and have every chance of continuing their bullish run. Growth in the oil market can be attributed to the epidemiological situation. Despite its obvious worsening, it does not lead to any new restrictions. Against this background, it can be concluded that the world is likely to see a continued economic recovery, with oil playing a rather essential role in this process. Demand is growing and the shortage of energy is becoming more and more evident. The point is that supply can no longer keep up with surging demand. In addition, oil production is increasing much more slowly than expected. All these factors are pushing oil prices up. Therefore, now it seems that the level of $87 per barrel is not the limit for oil quotes. Brent oil futures came close to their local high posted on October 25th, the level of $86.68 per barrel, and then slowed down. Obviously, speculative market behavior will continue to drive the quote up. The benchmark will most likely extend gains if the price consolidates above $87 on the daily chart. Until then, the risk of pulling back persists. As for the foreign exchange market, the prospects for the Russian currency are much less encouraging and more vague. On Friday, the dollar versus the ruble pair showed pretty high volatility, but in the end, the quotes remained unchanged. The ruble is still under pressure from the political situation. Since Thursday, the Russian currency has lost heavily amid the statement of the Ministry of Foreign Affairs regarding talks with the United States. A possible suspension of the US versus Russia strategic stability dialogue and potential tight sanctions frightened the market, but the next statement calmed down traders. The US Secretary of State Antony Blinken announced that the government was ready to continue negotiations. This news supported the Russian currency. Thus, if nothing changes, the ruble may well resume its upward movement. From a technical point of view, the dollar versus the ruble pair showed a jump driven by speculative moves, slowed down in the resistance area of 77 and 77.35 rubles per dollar, and then pulled back. The greenback is expected to keep rising if the price consolidates above 77.40, at least on the 4-hour chart. Otherwise, the trading instrument may go down, heading for the 74.5 mark. Meanwhile, gold appears to have lost its luster. The asset once again started to lose ground. Its confident movement near the local high of $1,830 per troy ounce ended with a pullback. However, this comes as no surprise, as the precious metal has already made 4 unsuccessful attempts to overcome this barrier. Such a dynamic indicates an extremely limited upside potential for gold. Based on this fact and its vain effort to get out of the sideways channel, it can be assumed that gold will most likely head towards $1,790 per ounce, the lower boundary of the range. In the meantime, the trading instrument is range-bound. After approaching the mark of $1,830 per ounce, gold futures slowed down and pulled back, and now the asset is moving in a sideways channel limited by the levels of $1,811 and $1,830. In this case, the best tactic is to trade with a view to breaking through one or the other boundary of the range. If the price fixes below $1,809 on the 4-hour chart, gold is expected to extend weakness. If the price consolidates above $1,835, gold will most likely gain value. And well, this was the forecast for the start of the trading week. May your trading be lucrative, and we'll see you soon back on our channel. Bye!